So this video is actually part of a longer video that I recorded. If you want to see the full video, check the video description, or I will have different chunks as well. So if you want to check out the different topics that I cover inside of this video, I do go into an in-depth reasoning as to why I'm putting so much money into Index Universal Life. So check the video description if you want to see the whole video. All right, so one of the most important factors with these life insurance, Index Universal Life is how you access the funds that you've put into it. And so, as I mentioned when we were looking at the values inside of the policy, you have access to about 90% or so of your cash value, and so you can take these loans, and you have in Allianz you have two loan structures: the fixed and the indexed loan. 99% of scenarios, I think that index loan is the way to go. There are circumstances where I might end up taking a fixed loan, but there's a good reason not to, and that's, conceptually in years 1 through 10, you get a 2.9% rate. That's what you pay to the insurance company to access those funds, and they credit your account with 2%. So your effective rate is 0.91%. But if you were to compare that to if you just kept it in the fixed account, you're also not getting 4.3 or 4.7% credited there. So those funds are no longer earning that amount. They're earning 2%. So you're reducing what could be your return of 4% or even higher if you're talking about comparing it to index loans. So you're reducing your return, and that's a you're not going to have arbitrage. You're sort of losing money as a product of using this. It's still not a bad option when you compare it to other things out there, but I don't think it's the best thing within this policy. And so after, in years 11 plus, you get 1.96, still getting credited this 2% year, 2% for that same year for the funds that you have a loan against using this option. So, that's good. It's a wash loan. You're effectively taking zero interest loans. And this is, again, why I don't recommend pulling the funds out, because you can, in years 11 plus, you could just use this option. It's sort of the equivalent of pulling those funds out. But you still have access to saying, all right, well, actually, I want to pay off that loan, or I want to reallocate it to the indexed loan. So the indexed loan, this is a big factor here. So the indexed loan is what's the real power inside of an IUL, and specifically in Allianz. So you're going to pay, this is a guaranteed rate, 5% is your interest rate that you'll pay to the insurance company, but you will continue to be credited on the funds that you have a loan against. So if you have a $100,000 loan against your cash value, you're going to be credited based on that $100,000 loan. Let's just say the index and all the crediting with the bonus and everything, you're getting a 10% credit. So you'll have made $10,000 on those funds while you're paying 5% in interest. And that's where the real power is. And especially as you get to these higher cash values, you get a ton of ability to have massive arbitrage. So I hope this video has been informative for you. I really appreciate you taking the time. I know this is a super long video, and if you are interested in learning more about this, check the video description down below to book a meeting with me. If you think I'm crazy, if me putting in $100,000 a year into an insurance policy is crazy to you, drop a comment. Let me know why. What doesn't add up here? I would love to hear your opinion on this. I think this is one of the best strategies you can do to build long-term wealth. But people might have valid arguments against it. I've done a lot of research and analysis, and there's a reason why I'm putting my money where my mouth is. I'm putting over $100,000 a year into life insurance. I will be putting out a follow-up video regarding my whole life insurance policy that I have. I think there's a place for whole life for sure in most people's portfolio, but it's structurally a little bit different. So. I do both of these things, and I'm putting in similar amounts of money into each of these. So again, if you want to book a meeting with us, check the video description. So this was recorded as part of a much larger video that breaks down my IUL, my Index Universal Life policy, and how Index Universal Life works in general. So if you want to see that, check the video description. I'll also probably put links somewhere up here for the playlist that has the smaller chunks of the video, like this one. And we'd really like to work with you. If we can find a way to help you, we'd love to. So book a meeting with us. You don't have to have nearly as much money going into this as we're walking through here. You can get started with a few $1,000s a year. And a good starting point is probably moving aspects of your emergency fund into this, because you can still access these funds within a couple of days by taking policy loans. So again, check the video description below. If you want to book a meeting with me, drop a like, subscribe, comment. Thanks for watching.